we're all going to die was the same we're all going to die that we had in September, the same all going to die we had in April, the same all going to die we had last January. It was the same we're all going to die in August in 2023. We're all going to die. We were definitely going to die in June 2023, and we were definitely going to die in March 2023. Do you get the picture yet? You don't remember any of those corrections. You probably remember that miserable one between March and September. But again, none of us died. Well, Elon's stock's getting hit because people don't like Elon. They're shunning his cars. Blah, blah, blah. Narrative. Reality, global M2. Oh, guess what? It's driven by liquidity. Tesla, one of the best performing stocks in the world over the last few years, decades, has been driven by liquidity. Oh, and also Tesla's driven by the business cycle. Who'd have thought that you sell less cars when the business cycle is weak, or when the business cycle gets stronger, you sell more cars? Tesla, year on year, is driven by the business cycle. I mean,
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Raoul Pal reveals insights on whether crypto will ever recover. This video covers his predictions, analysis, and market outlook. Let's watch them to uncover truth behind crypto's future.
When Elon was considered an environmentalist and anti-oil, the right-wing people would deface Teslas. I have two Teslas. I have a Model X Plaid with the gull-wing doors. Fucking amazing car. I've had some amazing cars in my life. That is one of the best cars I've ever owned. Maybe even the best car I've ever owned. And I've had Ferrari 355 GTSs, 911 Carrera, Turbo Cabriolets, Turbo S Cabriolets. I've had them all. That Tesla Model X Plaid is amazing. I love the minimalism and stuff. Anyway, so the right-wing people would deface the cars. And then what happened is Elon then did the whole government thing and the whole, that. And then suddenly now the left wing are defacing the cars. Are you guys fucking morons? It's a car. He's an entrepreneur. You might not like Elon, but he's pretty good at doing stuff. And it's so ridiculous that both the left and the right have always hated him at some point. And people are like, well, Tesla's stock. I mean, we saw the Tim Waltz thing today. It's embarrassing.
Binance froze a market maker's proceeds after discovering it had sold 66 million MOVI tokens while barely placing buy orders. The Movement Network Foundation recovered $38 million from the rogue liquidity provider and plans to buy back MOVI tokens over 3 months. Meanwhile, Trump Media announced a collaboration with Crypto.com to launch a series of Made in America, crypto and stock ETF, pending regulatory approval. This move could expand digital asset access to a global audience. Elsewhere, DeFi lender Nostra paused borrowing on 2 liquid staking tokens, citing a critical price feed issue on Starknet that artificially inflated prices. Concerned about unnecessary liquidations, Nostra disabled additional borrowing and advised users to withdraw affected collateral. The protocol admitted lacking a secondary Oracle solution to prevent similar incidents in the future. Despite these setbacks, prominent players in the industry remain focused on bolstering trust, improving accessibility, and minimizing risk in the evolving digital asset market.
Well, Elon's stock's getting hit because people don't like Elon. They're shunning his cars. Blah, blah, blah. Narrative. Reality, global M2. Oh, guess what? It's driven by liquidity. Tesla, one of the best performing stocks in the world over the last few years, decades, has been driven by liquidity. But it's also driven by a number of other factors. But liquidity's bottomed, so Tesla's probably bottoming. Oh, and also Tesla's driven by the business cycle. Who'd have thought that you sell less cars when the business cycle is weak, or when the business cycle gets stronger, you sell more cars? Tesla, year on year, is driven by the business cycle. I mean, God, people, the over-analysis of stuff. And guess what? Retail sales, new car dealers, ISM, correlated. So as ISM picks up, people sell more cars. As the ISM picks up, the business cycle is stronger. People have more earnings, they buy more cars. Right now, we're not in the car buying cycle. But going forwards, our leading indicator says that the ISM is going up, and therefore, if the ISM is going up, and we go back here, car sales are going to be growing at like 20% a year. But we're not there yet. Car sales are currently growing at 0% a year or just above, and they'll be going at about 20% a year. So what you've got is a discounted pricing mechanism based on the liquidity that gives you a once-in-a-business cycle opportunity to accumulate Tesla if you like that. Tesla, like all of these tech stocks, is in the log regression channel. It is one standard deviation oversold. It is likely to get to one standard deviation overbought and maybe 2 standard deviations overbought if the market's feeling frothy. Where does that get to? I don't know, but definitely north of 1,000. Feels like a 5x to me. That's not financial advice, but I'm just trying to show you that the business cycle trumps all. Things like the macro investing tool within Real Vision Plus is all of this stuff. This is what Julian Bittel and myself try and do for you, is to stop the fucking bullshit, the narrative arc. And it's to give you the actual tools to understand. That's what Real Vision Pro gives you. And you get to ask us those questions, whether it's myself, Julian, Andreas Steno, who's also part of Pro, or Jamie Coots in Real Vision Crypto, Pro Crypto. We're there to answer your questions and help you. Yes, I do this and answer some questions on the platform, but it's not the level that we do there. Real Vision Plus, that gives you these charts. It's like a life hack. It stops you being so stressed. The average response to Julian putting these things out every week is, thank you. I can just zoom out and realize that everything's going to be okay. At some point, it won't be okay, and we will tell you that too. We're not perma bulls. We're business cycle analysts. We understand liquidity better than anybody else. We understand the business cycle. We understand how these things come together. Does not make us infallible, but we get the odds pretty much in our favor.
Ethereum is once again under pressure, dropping nearly 50% from its late January high of $3,432 to a 16-month low of $1,750. Although it rebounded by about 18%, it struggled to hold above $2,000 on 2 separate occasions. Dwindling on-chain activity underscores this weakness, as Ethereum's daily transaction counts have tumbled to levels unseen since October 2024, preceding Donald Trump's presidential election victory. Network fees also reached an all-time low of 0.00025 Ethereum, $0.46, signaling limited demand for the blockchain's resources. Historically, Ethereum's price has responded to spikes in network usage, but current conditions suggest a lack of momentum. Another critical factor is Ethereum's shift back into inflationary territory. With fewer transactions, there is a lower burn rate, causing the total supply to grow rather than shrink. According to Ultrasound Money, the annual rate has climbed to 0.76%, meaning newly issued tokens outweigh the burned Ethereum each day. This trend reverses the deflationary era introduced by the merge in September 2022, which initially reduced mining-based issuance and aimed to curb overall supply. A sustained drop in fees and network congestion could keep Ethereum inflationary, placing downward pressure upon prices. Technical analysts have also noticed a bear flag pattern on Ethereum's daily chart. If a daily candlestick closes below the flag's base near $2,000, Ethereum could see a swift decline toward $1,230. Despite these risks, some traders remain optimistic. One analyst, Joel, expects a bounce above $2,200, while Crypto Caesar views Ethereum as undervalued, arguing that a bottom may already be in place. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.